Hi there. I would like to go through an example in this lab chat for Chapter 7 on the pay cash versus borrow concept. So I've got enough cash to pay for an asset that you would normally think about needing to get a loan for, but I'm trying to make the assessment whether or not it's a good idea. So we're going to take a look at a couple things. One is you need to have the worksheet in front of you. And I said print two, one to work together during this lab chat and one for the homework. And then also you need to have Excel up because we're going to practice getting the payment like we did during the lecture. So if you would please go ahead and just have your worksheet in front of you so that you can fill it out. I'm going to bring up my worksheet, which is where, right here. Great. So the first thing that I want to tell you is what the situation is. Okay, so this is the data, and it's my a client or a friend or me or whatever, Lucinda, and she's looking at buying a cabin, and it's $111,755. That's with all the closing costs and everything incorporated. And she doesn't know whether to finance it. She's actually got the cash. So she's going to try and figure out, we have to look at taxes. We have to look what rate her CD is paying, to look at a whole slew of things. So she can get a 5.2% loan for the cabin. That would be a term of 8 years. And it's an installment loan, so she would have to make payments monthly. I should probably write that down. So she can, over 8 years, installment loan monthly payments. Or she can take the money from her savings account. And her savings account is paying 5.9%. And her marginal tax rate is 22%. And the reason that's important is because any interest that she earns on her savings account is actually taxable for, it's, you put it on your tax return and pay taxes on it. Remember, taxable income. And her highest marginal rate is 22%. So I'm going to keep prompting you to turn off the tape and fill in things. So please fill in the top here, the amount of the loan, the length of the loan, and then the monthly payment. And to get the monthly payment, you're going to need to go over to Excel and go up to that little function, right? Well, I guess we're in Excel. Sorry. I mean, you're not in Excel, you're probably writing on your paper, but you need to go into Excel, go into this little function, right? Equals PMT, interest, don't forget what you have to divide by, comma, number of payments, comma, principal, and then meet me back up here. So shut the tape off. Okay, so if you're meeting me back here, the loan is at 5.2%. She's paying monthly. So of course you have to divide the APR by 12. The time period is 8 years times 12 months a year. So that's 96 payments I'm going to be making. And the principal is 111,755. So those are my payments, my monthly payments. So the next question is, if I'm paying that every month, and I'm doing that for 8 years times 12 months a year, how much in total am I paying in? So I'm going to give you 3 instructions and then stop the tape. So monthly loan payment times the number of times I'm making that payment minus the principal. So what did I originally borrow or pay for the cabin? And the balance is, of course, the interest on the loan. So go ahead, stop the tape and figure out those 3 things, please. So over the life of the loan, I'm going to pay back $136,845.12. The principal amount of the loan was that $111,755. So the difference between those two numbers is obviously the interest that I've paid. So over the course of it, I'm going to pay $25,090.12 in interest. Okay, the next thing we have to think about, so that's what it's going to cost me to borrow the money, right? This is the big number. How much is it going to cost me to pay cash? Well, if I pay cash, I'm going to take the money out of my savings account. I'm going to lose the interest I earned on it. But remember, I don't get to keep the whole amount of the interest because I got to pay taxes on it. So we have to figure this all out. So let's go back up. My savings account's paying the 5.9%. That's a very, very not realistic number. I've obviously got that in some sort of like international bond fund or something. And I'm paying 22% marginal tax rate. So first, it's how much am I earning per year on my savings account? What was it again? 5.9? I just looked that up. Okay. Yeah. Okay. So 5.9% times the $111,755. That's how much I'm earning for 1 year. But I'm gonna be missing it for 5 years, right? So my annual interest 0.059 times 111,755. So every year I'm going to lose $6,593.50 in interest, okay, for 1 year. But this is an 8-year loan. So I'm going to lose that every year for 8 years. You see that? That's my APR, that's for 1 year. So over the course of the loan, I'm giving up $52,748.26 or 36 cents of interest income. Okay, that's a chunk of change. But remember, I don't get to keep all that. I have to pay tax on that. So how much tax am I losing? So calculate what you think the tax bite is over that 5-year period. So it's 22% of that amount goes out the door in taxes. So I don't get to keep the full 52,748. I've got to pay 22% of that. So the balance, or the net that I'm losing, is $41,143 over the course of the 8 years. So find the difference, the last piece. So we've done the cost of borrowing is going to be 25 grand. The cost of paying cash is the loss of 41,143. So the last thing says, find the difference in the cost of borrowing and the cost of cash. So this cost of borrowing minus the cost of paying cash. And then I said, if this is a positive number, you want to pay cash. If this is a negative number, you want to borrow the money. And I think you can see that if it costs me 25 grand to borrow the money for the cabin and I lose $41,000 in interest income, that's a pretty bum deal. So obviously it's $16,000 to my benefit to borrow the money. The problem with this not the problem, but what isn't realistic about this is, I mean, you're not going to be getting a 5.9% on a savings account. Let's just work it and see if it's 1%, which is probably more realistic, right? I'm getting 1% on my savings account. That would probably even be good. Then all of a sudden, oh my goodness, it's only costing me $6,900 in lost after-tax interest income, and it's costing me 25 grand to borrow. Well, clearly in this situation, I'm going to use my cash to do it. So hopefully this has been helpful, and you will be able to work the homework. If you have any questions, please let me know. And also there's a video prep for the test, and there's lots of extra review work to do. So hopefully once you've got chapter 7 in the bag, you will start to go back and review chapters 4, 6, and 7 for the second exam. Thanks a lot. Bye.